Okay. Well, we have just about half a minute left. But Udain, the mid-caps, as Anuj has been saying, have started recovering over the past week. What kind of trades can one take? Would it be cement? What sectors?
It's a tough one to call, Lata. I mean, we are talking about a pre-election mood rally. It's difficult to pick sectors and justify with any kind of logic on what will move. I would still stay away from some of the ones which have very severe headwinds, things like, telecom, NBFCs, etc., and try and play some themes which are evergreen in India and where the market expects that there might be some recovery post-elections, infra and consumer, I would say.
Okay. All right, coming back to Udain, the markets have opened with a shade of red, as the SGX indicated, closer to 10,820 is where it's opened, so about 40 points lower, and the Sensex about 100. That's 35,000, a little south of 36,000, 35,950 thereabouts. The Nifty Bank is down 1/3%. It's doing slightly better only slightly better. The mid-caps have just about opened flat. Advanced declines are looking a little better, with about 2.5 stocks in the green for 1 in the red. So, well, it's actually an uneventful kind of opening. Maybe the important takeaway is that it is not as bad as GX Nifty indicated. Tata Motors is your best performer, 1% higher. And then come a stock that you normally prefer when you're confused, Power Grid. That's up about 1%. Coal India actually reported good output numbers and sales numbers for February. That one is up 0.9. HP, BP are higher. That's the quiet prices of crude having an impact on these stocks. Metal stocks also not doing too badly. Vedanta, JSW. Axis is among the gainers today. Well, what's the losing list? The losing list is Eicher Motors. Oh, okay, two-wheelers getting punished. Eicher down 2%, L&T down 1.5%, Wipro down 1.4%, Bajaj Auto 1.3%, DRL, Dr. Reddy's giving back a little of its gains, down 1.4%, Tech Mahindra, Bharti Airtel, Yes Bank, all about 1% in terms of losers. So actually quite an uneventful opening. Nothing is too high or too low. No dramatic moves except for Eicher, where the cut is 2%.
Absolutely. It's a very flat opening for the mid-caps as well. The market breadth is in favor of advances. 2:1 in favor of advances right now. Jet Airways is the one that's taking a big knock because more planes of theirs have been grounded because of non-payment to lessors. So Jet Airways down about 2%. Bharat Forge is under pressure. It has been for a while, so it's down about 1.5% right now. Ashok Leyland reported sales which were below estimates, absolutely flat year-on-year at 18,200 units. So Ashok Leyland is under pressure, down about 0.5%. Then you have a TVS Motor that's trading a tad bit in the green right now because the numbers were not too bad. It was a growth compared to peers like Hero MotoCorp seeing a degrowth this time. So TVS is up almost about 1%. Couple of stocks actually hitting 52-week highs, names like PI Industries, Zipcar Labs, etc. So keep an eye out on those names as well. And a couple of these PSU banks under pressure. In fact, the whole lot. Allahabad Bank, Union, OBC, Bank of Baroda, all down about 0.5% to 1%. So yes, it's a flat opening, down about 20-odd points, just consolidating around the 10,800 mark.
I think it's a decent start, Sonia, you'll have to say. Look, the mid-caps will be bought in this market. The mid-caps made up a sort of a hard bottom. This is exactly the kind of screen that, a lot of bulls want to see. Nifty down 2022. And look at the way the mid-cap index has just picked up. It's up 0.5% right now already. And you've started to see a lot of stocks make highs of the day already than the lows of the day. Nalco, for example, is making highs of the day. ICICI Prudential making highs of the day. Jindal Steel and Power, that's making highs of the day. Adani Power making highs of the day. India Cements making highs of the morning rather. So things looking good on the mid-cap side, and that low now becomes perhaps even on the Nifty perhaps sacrosanct. The bank Nifty is about to turn into the green already. So that first dip has been bought. On a day like today, you want to buy the first dip because the market's texture has been buy on dip. It's the second dip which happens sometimes in the later first hour. That would be something to watch out for. But Ashwani, your thoughts on market opening? The mid-cap index now up 0.5%. The bank Nifty in green.
See, I think it opened around 10,800, 820, and that was the place to buy. My sense is that we are fairly likely to make at least a fresh intraday high on the bank Nifty. And overall, I think that dip finally not much came through because yesterday's news flow on those exports doesn't really impact a whole lot. Nifty Junior is now up 134. So I think mid caps are likely to outperform and possibly hit fresh intermediate highs.
Okay, fresh intermediate highs. Look at stock like Motherson Sumi. Now, that's been the one which has been seeing quite a bit of buying. Of course, this morning there was news flow that they have also released a lot of their pledged shares. That's seeing a bit of a buying interest. So, a lot of the mid caps are continuing the good work that we had seen from the last few weeks. Sudarshan, your thoughts on market opening and any interesting stock idea?
Yeah, it's an excellent open for the bulls, and I've suggested buying at the open. So if you haven't, this is a good time to buy and go long in the Nifty Bank both. L&T, which opened 25 rupees lower, big gap down, is recovering, and it is an excellent opportunity for the day as a buyer.
Okay, Mitesh, any stock on your radar?
Couple of them, Anuj. Cement stocks, Ambuja and India Cement look good. BPCL is showing good traction on the upside, while one negative stock is HDFC Bank, which can be short with the day's highest stop loss.
Okay. So the rupee is strengthening a goodish bit at this point in time. Of course, we've had soft crude cues as well. And the US dollar has also been soft. So all that's helping for the moment. The dollar index, okay, actually is flat from yesterday, but softer from last week. All that's helping the dollar, and it's strengthened a goodish bit, 70.80 at this point in time. I mean, the strength is for the rupee. The dollar is weakening. Then I wanted to ask you, the pre-election rally, it's still early days, isn't it? I mean, we still have at least about 40 days before the first vote will be cast if the elections happen on time. So there can be a lot of mood swings, right?
Of course, Lata. I mean, this is not a given. And I said right now, after the events of the last 10 days, and this is all it's a shifting thing. It's not like it's a given that the mood will remain like this consistently for the next 40, 50 days or 2 months. Things will happen. People will react to it. Sometimes one end will seem to have the momentum. Sometimes the other camp will seem to have the momentum. And this will be a game of who can wrest the communication or the narrative or initiative with the narrative till the elections are out. While all this plays out, you will have a much more important, fundamentally much more important event in the communication from the US and China on their trade negotiations. If that were to get resolved amicably or some deal were to happen, that gives you another scope for a global rally, risk-on rally to flesh out maybe for a few weeks. None of this will probably alter the landscape, economic landscape, conclusively over a period of time. But in the near term, I think it's all very difficult to predict because you don't know what the armed forces will be up to. But right now, the stars are aligned for a bit of an up move. It's a cyclical up move. It's to do with events, etc. So play it as it is and don't jump to big conclusions about what it means for the trajectory for the rest of the year.
Okay, the mid-cap index is now up 110 points. The Nifty also about to break into the green. The Bank Nifty already has done that. Other mid-caps now making highs of the morning. IDFC, First Bank, GSFC. There's quite a bit of buying which is happening in a couple of these names. The breadth of the market, 3:1. That of course will happen. Amara Raja batteries also at the high point. Also what's helping our market is that crude, which was at 67 last week, is now somewhere around 65. So, I mean, something like an Indigo is making highs of the day. That's also helping. So a lot of these stocks doing well right now. Mid-cap market clearly right now seeing quite a bit of rally. Okay, Udayan, so before we let you go, I just wanted your thoughts on what now is the bigger risk. The fact that you get into this sort of euphoric phase about the broader market ahead of election. Is that a bigger risk, or you think the bigger risk is still from the global point of view?
No, I don't think the market will get into euphoric mode. The market might get into an optimistic mode, and you can see a significant rally flesh out over the next few weeks. Euphoria, if it were to be triggered off, will need a lot of things to happen, and I think that will need the outcome which the market wants, which is the post-election outcome. You need much better support from the global mood as well. And if all of this were to come about, then you will see mutual fund inflows pick up once again. and that might be the starting point of a more durable rally. Right now, since the start of the year, the mood has been downbeat in the market. People have not made money. It's only in the last 10 days, ironically, since military escalations began between the two countries, that the market has a glimmer of hope and we are seeing a rally play out. So we'll have to keep an eye on how things pan out, not get too carried away, and treat it as what it is, an event-led, hope-based rally for the next maybe a few weeks. But keep an eye on the economic ball, because that is still, as we were discussing earlier, still looking quite sticky and won't change very quickly from all indications.
Udin, just before we let you go, just coming back to the point you were making about the weakness in, some of these pockets like autos. I mean, as we speak, Eicher Motors is down almost 2%. Most of these stocks have lost almost 20% of their value this year. At any point, do these stocks become a value buy, or is this a structural slowdown that we're going through and it's better to stay away?
I think these stocks will bottom out, Sonia, at a time or at a point when the market has more confidence in the current slowdown ending. Because autos, as you well know, is a fairly significant proxy for general economic performance. At a time when the GDP number is slowing down, monthly numbers are looking very sluggish, and you are basically into a guessing game on how long this economic slowdown will last, this is not the time to call a bottom for autos. You need to get a sense from some of these fast-moving indicators that maybe the cyclical slowdown will end in 1 or 2 quarters. So periodic rallies might happen, and that may happen in autos very soon as well from bombed out levels. But I think a more durable bottom and a significant up move has to be predicated by some signal from the economic parameters that this cyclical slowdown is coming to an end. Otherwise, you're going out on a limb and buying autos now, not knowing how entrenched this GDP or economic slowdown is likely to be.
Okay,
Right.
Thanks a lot, Udayan. We are going to be speaking to an auto dealer shortly, so probably we will get a different angle or a more realistic angle from them. Thank you very much for joining us. We'll touch base with you very soon, I hope. Well, with that, let's thank our technical experts as well, Ashwini, Mitesh and Sudarshan. We will, of course, touch base with them at 10 a.m. Let's invite our market master for the morning, Rajat Rajkaria, Managing Director, Institutional Equities at Motilal Oswal Securities. Good morning, Rajat. Thank you very much for joining us. Do you think that the market has more legs to run beyond the 10,000 mark, beyond the 11,000 mark? What with some sense of feeling that the political wave favors the NDA?
Hi, good morning, Lata. Well, I think if you look at the multitude of factors which have impacted the markets, some of them are turning positive. But I also wanted to highlight here that for the broader markets, Nifty is no more becoming a more relevant indicator, because the broader markets have seen the kind of pain that Nifty does not reflect over the course of last 6 to 12 months. And that is where things need to start correcting back for people to feel good about this market rally. Nifty may remain within a range of 200-300 points, but you can see few weeks of very strong rally continuing into the broader markets, which is what will bring more positive sense.
Okay. But that mid-cap index also has done reasonably well over the past 2 weeks, hasn't it? I mean, I think it's what moved. It was very close to 16,000, the mid-cap index. It's moved substantially from there, almost 1,000-point move in the last week.
So I wanted to highlight one data that we have been working upon. I mean, just to first stick to the Nifty, if you break the Nifty into top 15 and next 35 stocks, the top 15 are trading as if the Nifty is at 12,500. And I'm not making a guess. These are numbers that we compute based on the stock prices. And the next 35 stocks are trading as if the Nifty is trading at 9,000 index. So you can see how big the deviation has been within the Nifty 15 and Nifty 35 names. Imagine the broader market where we are talking about a 1,000-point rally. This is again a mid-cap index. Look at the small cap index. From the peaks of the last year, the small cap index would still be, in my sense, down almost close to 40%. So I think we are seeing some rally getting built in, but if this optimism were to continue, it has to reflect into the mid caps and the small caps more than the large caps.
Okay, yeah, of course, it's now beginning to do that. By the way, Mindtree is now down 1.5%, so that's something where, those Thursday rallies, Friday rallies are getting sold into a bit. And the Nifty is now down 15 points. It's, of course, off the low point, that morning gap down. But normally on days like today, you do get a second dip because of the global cues. So that's something to watch out for. Rajat, hi, good morning. Your thoughts on, oil marketing companies making a bit of a comeback after that disastrous derating post that, 1 rupee move that we had from the government. Is it a good time to perhaps start buying again? Is the confidence returning, or you think perhaps that kind of valuation will never come back?
Well, I think it will take a long time for those valuations to come back in oil marketing companies. And in our view, they are just a range-bound stocks right now. I don't see them reacting strongly even if crude were to fall down by another $10–15 from here, if it were to fall down. I think a lot of the investors have deserted these names after holding them for 3–4 years, and most of them would look to exit them on any rally rather than buy them on any decline. So I think at this point of time they are going to be range bound names. There are few other PSUs who have become far more attractive than these oil marketing companies at this point, and generally also the PSU allocation is not increasing in the portfolio of the people. So at this point of time these OMCs would largely be range confined.
Okay. Rajat, hi, good morning. Wanted your thoughts on autos as well. I mean, if you look at the entire industry, for passenger vehicles, Maruti, M&M, Tata, Honda, Toyota put together this month have grown just about 1.8%. And two-wheelers is even less. Hero, Bajaj, TVS, Royal Enfield, Suzuki put together, it's just a 0.1% growth. Do you think things could get worse before they get better? Or have we bottomed out in the auto cycle?
Well, I think autos are truly reflecting the kind of slowdown that we are seeing in the system, both cyclical and structural. And I think on the cyclical part, some of the issues that we saw because of the NBFC slowdown, liquidity issues are impacting them. Some of the structural issues are relating to the change in the emission norms and the competitive behavior, which is also impacting the underlying profitability of the companies. I don't see things getting worse for the sector as a whole. Of course, segments can see varied impact, but I think you will see things taking a long time to recover for most of the companies in this sector. This has been one of the most highly profitable growing sector over the last 5–7 years, and some normalization is something which 2019 should see for this sector as a whole, and that is why you are seeing investors now trimming down their exposure to this space.
No, but what about their sales? You expect this slowdown to continue?
Well, Lata, I think you will see the growth numbers being far more muted, even though the absolute numbers will start bottoming out what we are seeing at this point. I don't see volume numbers being lower than what they are trending right now. But this is a sector of growth. Unless you see double-digit growth happening in the segments that you want to buy in, you will not see investors returning. So I don't see growth numbers being good. I just see the absolute numbers being closer to what they are right now.
But it's been such a long wait, not just in autos. I mean, it's been frustrating even in spaces like capital goods. For example, there was so much hope that there's going to be a capex recovery for names like L&T, etc. None of that has played out. In fact, L&T is down almost 15% this year. How do you approach that space?
If you just see how the large corporates in India have been behaving, there have been one space who have been selling capacities and the other space who have been buying capacities. So how will capex happen? People who have money with them, they are able to buy ready capacities at discounted prices. Until the time you do not see clearance of those capacities happening, you will not see new capex happening. And that's why whatever capex we saw in the last 3–4 years has essentially been PSU driven, not private sector. But I think we are somewhere coming close to the end of that phase, where a lot of the spare capacities have been sold from distressed sellers to prospective buyers. And as the capacity utilization in the sector starts picking up, which it has been doing in sector after sector, I don't think we will have too long a waiting game before we start seeing private capex panning out. It could be second half of fiscal 20 or first half of fiscal 21.
Okay, the theme of the market is to keep buying some of these beaten down names, and that is continuing. And just look at some of the names. Housing finance, for example, you're now seeing a big buying interest in names like Canfin Homes. That's surging at this point in time. Indiabulls Housing is very strong. Even something like a Diwan Housing, that's also seeing buying interest. That's Canfin Homes, of course, up about 4%. The highest, in fact, the top F&O gainer now is Repco Home Finance. That's the one which was selected for the maximum punishment over the last 1 month. That's the one which is seeing quite a bit of buying. Repco Home Finance now up about 5.5%. So looking like a bit of a trend day now on at least this sector, and a lot of these mid caps now flying point and gain. Your thoughts on housing finance, Rajat? That's the one which took the maximum punishment in the NBFC space. Anything that you want to buy here?
Well, if you look at this space, 18 months back, there was nothing wrong that this sector could have done, and we had the highest valued company trading at 15 to 18 times price to book. I'm talking about GRU. We have another housing finance company which got listed just less than 3 quarters back, and that stock has already crossed its all-time high. I'm talking about Awas. I think this is a space which will remain very exciting, and important to note, in the last couple of quarters when the stress has played out, you have seen private equity guys coming and writing big checks to take majority control in many of these companies. I think the longer term outlook is very, very positive. It's just that how do companies manage this current space of liquidity? Whoever will survive from this liquidity will have to just remodel their business growth rates a little bit, focus more on liability franchisee. But the growth outlook is going to remain a lot stronger, not at the top end of the pyramid, but at the bottom end of the space.
All right, Rajat, we leave it at that. Thank you so much for joining us and giving us your thoughts on the market, as well as, more importantly, on individual sectors.